Key events this week: January CPI inflation data on Tuesday, U.S. retail sales data on Thursday, as well as Philly Fed manufacturing data. Coming into Friday, we have January PPI inflation data and a total of 8 Fed member speaker events this week. The 8 Fed speakers are the 3 on Monday, including Bowman, Barkin, and Kashkari, and then Wednesday we have Goolsbee. Thursday, Waller and Bostic. Friday, Barr and Dolly. Now, Super Bowl betting just hit a record $23.1 billion, and DraftKings reports earnings this week, so it could be a positive gap higher on earnings. Take that with a grain of salt, but it's something to watch coming into the week. Next up, Jeff Bezos has previously just sold 12 million shares worth of Amazon for about $2 billion, which is his first sale in Amazon stock since 2021. If you hold Amazon, take that with what you will. And finally, Nvidia is worth as much as the entire Chinese stock market. Speaking of Nvidia being worth the entire Chinese stock market, hedge funds continue to overcrowd trades, which is something that we touched on towards the end of 2023, coming into 2024, and it is a major problem, posing systematic risk, but not necessarily to retail investors as long as we're using stop losses, but more so institutions, hedge funds, short sellers. Have you guys seen the previous gap up in ARM, ticker symbol ARM, in the electronic technology semiconductor sector, just like over in Nvidia? Well, on that surge, on ARM stock surge, that basically burned short sellers to the tune of $445 million in paper losses. Now, $445 million on one stock in about 2 trading days is much greater than the things we have seen, such as short sellers losing 190 somewhat billion in 2023, right, in the overall market. If we take a look at when short sellers were down 195-ish billion dollars shorting the overall market, since then, the market is up a shit ton, and you're seeing a bunch of other tickers having these sort of short squeezes like DWAC, like PUN, TENX, right? The list goes on and on. Now, I want to touch on what is about to happen with AMC come Monday, come tomorrow, right? But since we're on the topic of hedge funds face a cash drought as most strategies lose luster. Fund clients pulled $280 billion in 2023, according to Goldman Sachs, and the survey shows that credit remains most sought after strategy. Hedge fund strategies are not holding up, and we've seen several of them close down because of this. But not only have we seen some of them close down and hand money back to clients, but we saw money pull from them, from clients. Clients are saying, listen, your strategies are not working. I don't want my money with you. This is dangerous, this is risky, and the things you're doing are extremely, extremely risky. And a part of that we're going to touch on is shadow banking in 1 second. Now, AMC. Also, guys, I didn't ask you yet. Make sure to hit the like button on this video. Comment down below. Since I research, edit, upload, record, not in that order for you guys, it helps me out. It's free. Subscribe to the channel. Now, AMC on Monday, I want to warn you guys. I want to preface this. AMC Networks is not AMC. AMC Networks US ad sales fall 23% in final quarter of 2023. Streaming subs inch up. Okay, there's a lot of negative news around AMCX, and we saw previously the narrative they tried to push with AMCX to drop AMC, and I want to warn you guys that for Monday, for a fake sell-off, if that does happen, it's going to be because of AMCX. AMCX was down about 16% on Friday and gapped lower, which is not a good thing to see. Okay, AMC is overlaid over this. The charts are very, very similar, so just be aware of this. Okay, this is the results on UBS Dark Pools, which caused AMC to drop significantly from $45 to $4 post split price. Here are the venues that were used by UBS ATS Dark Pool, which contributed to a significant amount of volume that same exact day. So the big drop on AMC in August was caused by a short seller using UBS alternative trading system Dark Pool just before the conversion and reverse split. Speaking of alternate trading systems, lurking in the shadows, hiding shares, dropping stock price, shadow bank loans from US lenders surpassed $1 trillion in Fed data. Banks lending to non-bank financial firms has steadily risen. Janet Yellen said this week that officials are monitoring risk. Now, what does this mean? Why is this significant? First of all, shadow banking and the crisis of 07 and 08 is something that had a large impact on the market sell-off that people don't really talk about, okay? And on top of that, short sellers now, right, February 8th this was out, are increasing their bets against regional banks amid several different factors, okay? So short sellers are shorting banks to a high tune right now, and banks aren't doing well. Not only are they not doing well, but the Bank Term Funding Program is being cut off completely in March by the Fed, But not only that, they are still over leveraging. So where is the risk monitoring that Janet Yellen says is here? In quotes, the amount U.S. financial institutions have loaned to shadow banks such as fintechs and private equity groups has surpassed $1 trillion as regulators warn that growing ties between traditional and alternative lenders could present systematic risk. In quotes, these hedge funds, private equity firms, direct lenders, and others use the money to leverage investments and increasingly lend it out to a range of risky borrowers that regulators have discouraged banks from lending to directly. For all banks, shadow bank financing now makes up more than 6% of all loans, putting it just above auto loans at 5% and just below credit cards, which crossed $1 trillion for the first time last year at 7%. So regulators are saying, listen, these hedge funds, these equity firms, these private equity firms, these direct lenders, as well as other entities are posing large systematic risk when they lend to a range of risky borrowers that otherwise we don't want them to lend to directly because we would see it. Now they're saying this systematic risk is so bad because the lending to risky borrowers has surpassed $1 trillion, which means if these risky borrowers, right, that's like a bank lending to someone with a 200, 400 credit score, right, can't pay it back, this could cause a major risk to the entire financial system, just like it did in 2008. Another thing I find a little bit odd touching on AMC is over on Twitter, it seems like likes are disappearing, and let me know what you think about this in the comments down below, but something has been going around about Brett Harrison, and this post had 4.5 thousand likes, and yes, people can unlike something, but a little bit later, it dropped to 4.4, and then an hour later, 4.3, and then to 4.1, 4 minutes later, then back down to 4,000. It's a little bit odd, but let me know if you are having some sort of issues with X as well, or if you're seeing this. Before we close out the video, coming into the week, Ethereum Classic, dumping in its point of interest, which I think AMC is going to follow, as well as GameStop, and Ethereum Classic is following the bull run that crypto is going in. Bitcoin is doing extremely well. This is it, right? This leg up, this is the start of the beginning of the all-time highs, okay? This is the beginning of the end. If Bitcoin breaks clean break over 49.5, we're coming to 54 to 60,000 on Bitcoin. Main reason Bitcoin is pumping is because literally 20,000 Bitcoin have been bought off the market in the last 2 days, which is absolutely nuts coming into the halving. I posted a video yesterday, the stock market crash of 2024, bad correction incoming. Make sure to go watch that. That is an important video for the overall market and may steer your portfolio one way or the other. Make sure to turn post notifications on for the channel. And if you guys want up to 15 free stocks, each valued up to $2,000 per stock, it takes 2 minutes out of your day. Do it before the weekend is done. And if you've already done it, have a family member come over to the channel, press the link, and do it themselves. Sign up for Moomoo. It's a broker that keeps your money insured, safe, gives you level 2 order book data for free, a customizable earnings calendar, very good notifications. Overall, just a great platform. But they're giving you 8.1% APY on your uninvested cash initially for the first 3 months, then 5.1 for the rest of the year, and up to 15 free stocks. All you got to do, press the link, open an account, and deposit $1. Also, join the Discord. The link is right under the video. I'm in there on the daily, so you can come talk with me as well as the most amazing people. Best vibes in there. Level up your trading journey. It's fun. Coffee a month. If you're thinking about joining, press the link, watch the trailer. So get your free stocks and join the Discord. In my opinion, those free stocks, once you sell them, will pay for the Discord for months, right? It's a win-win scenario. That is it, guys. I love you all. Lottery Stocks out.